Good morning and welcome back, everyone, to Schwab Coaching for the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner, bringing today to you from a beautiful sunny Denver, Colorado, and today joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. Great to see you once more. How are you today?
Doing good, Kev. I'm happy to be on. Happy to talk about the markets. Got a big day on the markets between some. Well, we'll get to it. So you just got to wait, and we'll talk about some of those big things happening today. And I'm also glad we're joined by Cameron May. I guess you'll talk about that. I'll let you talk about Cam here for one sec. But good to be here.
Yeah, plenty, like you said, plenty to get to. Obviously, we have FOMC decision day today. We're going to be hearing from Fed Chair Powell on the testimony thereafter. Market tends to get a little bit excitable and a little bit volatile from time to time following these, or actually in the midst of these conversations and then following them. So plenty for us to keep an eye on and monitor with all of you. So perhaps today is one of those days where we talk about maybe setting some levels, knowing how you want to act based on how price action dictates things after the fact. This can be one of those days for us all. So we'll try to set those levels as we work through the number of charts we're going to get to. As Brent mentioned, we have Cameron May in chat, so say hi to Cam. He'll keep an eye on some of the postings, questions, comments that Brent and I are unable to get to, but we'll try to do note as many of those as we can throughout the discussion. Please feel free to post in there for the duration. We go about 45 minutes in total. Additionally, remember to follow the three of us on X, Kevin Horner, CS, Brent Moore, CS, and Cameron May, CS. We try to post for you there throughout the week with notable charts or data that you might see in the marketplace here. It's a good way to engage with us coaches outside of the segments that we host. So without further ado, we'll remind you, though, that our discussion here is exclusively informational and educational. We do not make recommendations nor endorsements for any particular security or strategy to trading the market, of course. Remember that technical analysis should be considered complementary in nature to your fundamental research. We encourage you to base decisions off a multitude of pieces of information as opposed to exclusively off what you see in technicals specifically. Additionally, remember, options carry a higher level of risk, are not appropriate for all investors. You want to be familiar with the characteristics and risks of standardized options before any investment. You need to be approved on each individual account in which you would like to trade options prior to doing so, of course. And remember, you can actually have differing levels of option authority from one account to the next. Make sure you review all of the requirements there. And today we might actually discuss some optionability details as it relates to a few companies that are set to report earnings today. So that could be a notable detail for us today. Of course, in terms of our agenda, it's the standard, everybody. We're going to work through the major indices, hit up some sector action, and then a multitude of stocks in the news today for some heads up in advance of earnings, and then some recent shifts by some analysts on thought processes about groups and individual stocks as well. So plenty to get to. Let's start out with the S&P 500 as we do, Brent. Liked the day we got out of the SPX yesterday. A nice follow through day, moving through the high of our low day in this pullback, Monday's high. So are you enthused? Are you thinking we're right back on the level here, Brent? What are your thoughts?
I think from the trend perspective, yes, I would say so. I mean, it's always interesting when we have kind of out of the blue news, and I'm going to call that deep sea news, just kind of like, wow, I didn't see that coming, and how that's going to affect the market. And we had a sizable pullback, but the market has done exactly what you want to see if you want to see a continuing trend, in that it just kind of picked up and gave us a bounce. And we had a gap down. This was, and yeah, as you zoom in, you can see that gap down. We're basically filling it, aren't we? So, I'll see what happens today, but right now it's doing what you'd kind of expect, I guess, or hope, I guess, if you're bull. If
you were bullish, yeah, no doubt. We could speak to the fact that we hammered that 20-day moving average right on the open with yesterday's low. Monday's low, excuse me. But yesterday, again, having moved through the high on Monday, that's where we gained momentum and really took off. So it's nice to see that. However, Brent, there's a lot of traders who would point to the fact that we just basically rallied into the gap, filled the gap, pushed to the close. Yesterday, the high at the high was 6,074, and we closed at 6,067. So we basically pushed right into the lows that we had seen over these last 3 days: 6,076, 6,074. So basically filled that gap. Now, Brent, that stands out a little bit, doesn't it? Because if that is resistance, let's say we don't get back through it,
Yeah.
this is going to look like a bit of an island reversal almost, isn't it?
Yeah, and so we'll just have to wait and see on that. I mean, the first takes two steps. One is fill the gap, and then two is, stay above it, I guess.
Yes.
And so that old potential support doesn't become new, isn't this new resistance level. So, and we may not know today on that, if we get a big bounce down today. And of course, today could be a volatile day with the FOMC meeting and every, minutes and whatnot, and earnings and whatnot after the bell. But look, where we're at right now, if we bounce down from here, doesn't mean the trend is broken, but it does show that potential resistance may be a little bit harder to break and could be more of a sign of more just kind of sideways-ish action here on that. So, well, it did the first thing yesterday. We'll have to see. Obviously, we just have a few minutes of data so far today, so we'll see what happens.
Not a lot to work with at this point in the day, but we could say if you're a short-term trader, you might eyeball these two lines I've put in here, right around 59.70 in the 20-day moving average. Trading through that to the downside could mean some weakness, and some traders would use that as a means of taking risk off the table, selling some of SPX positions or positions tied to the SPX. But conversely, if we started to trade through 6,075, 6,080 to the upside, that could be the impetus to start pressing a little bit, deploying more money, increasing your risk factors a little bit, in the sense that it might be the actual continuation in a short-term scenario. So it does give us the levels to watch. It's a tight range, but it lets us set those levels and know where maybe we want to take action one way or the other. Are there levels outside of those two, Brent, that maybe you're watching next?
So let me just mention this first of all.
Sure.
The support in theory should be a pretty strong support because we have the convergence of our moving averages and our bounce area. So when we have those lines that are converging, those different areas that are converging, the more significant they are probably. So yeah, that's where we're talking about right there.
Yeah.
Also, let me point out one other thing here. We do have a little bit of a divergence on that RSI there at the bottom of the page from our early December high right up there to the most recent high a few days ago. Definite low on that RSI, whereas the stock, or the index is actually higher. So that's not, a guarantee the market's going to reverse or anything, but that would be one little more check mark in that camp of the not bullish camp there in the midst of that. So if we do, that's I think in terms of the high, other levels on the high side, well, I mean, other than the high that we had about 4 days ago, that's an all-time high we hit 4 days ago. So, unless you kind of draw some channel pattern or something like that in there, I don't see anything else in terms of resistance there. And then on the downside, yeah, probably around that 5,800 level, I would guess. Maybe a little bit above that. Actually, even above, around the 5,900 level, where we had that gap about 2 weeks ago, would be the next possible, next significant support level, I guess I would say.
Yeah, and then I think the one that we tested here as well, you've got a few different layers, but as always, we're just trying to set some levels based on maybe potential expectations. And the reminder isn't that we think it's going to go there, just that is a possibility, Brent. I mean, that's what we have to suggest. It's certainly a possibility if we start to break down one of these layers will become support. We will get likely a bounce. We just don't know where that's going to be. So it's important to set those levels and know how you want to act, right?
Right. And just a reminder, this is something Paul said in the chat. The FOMC will set the direction for the market. So whatever technical analysis we do, if there's some commentary in the discussion today, I mean, I'm guessing we're not going to have a rate change, but the press or after, that certainly could set the direction of the market, to Paul's point there.
Absolutely could. And let's just final note on this with the RSI, the bearish divergence, having made a new higher high. Remember, we're not suggesting, nor is RSI suggesting, that a bearish divergence leads to a reversal, right? It can be the precursor to a reversal. It could also just be the precursor to a choppy market and sideways action over the coming months. That means we just aren't ready to break out. Doesn't mean we're ready to reverse, right? So we have to bear that in mind. Traders tend to get a little bit black and white sometimes with our assertions. So try to stay in the gray area maybe and recognize that it's not an entirely, all right, if this is the case, well, then clearly this is going to happen. That is not what markets, and certainly not what trading is about, Brent. I say often, the market is all about probabilities, not certainties. So if we have a bearish divergence, does it mean we can't move higher? No, it might mean that it's less likely that we move higher immediately.
Yeah, you said it perfectly there, Kevin, so I won't even add anything on that.
Wow, well, that never happens. Okay, we're moving on, Brent. Let's go to the NASDAQ 100. A little bit of red here, off 0.33%, not a big deal. But as I zoom in, we're going to see something similar to what we saw with the SPX. A very significant sell-off, filled basically into a gap level. No one should be surprised about this. And then a follow-through day yesterday again, where once we cleared the high of Monday, man, did we get some enthusiastic buying and a wonderful finish closing near the high.
We did, but no, the sell-off was bigger. We had the bigger gap, so it's not like the SPX where we bounced, we came right up to that potential resistance level. There's still more to fill here if you're looking to fill the gap on that. Probably makes sense. The NASDAQ got whacked harder than the S&P 500 because, the DeepSeek thing was, hit tech harder than it did the rest of the market. So that's why we had the bigger sell-off here. But in general, the chart looks pretty similar, but we did not fill that gap quite yet here.
No, not quite. And so we've got some room to go if we wanted, to get a little enthusiasm in here. Maybe that 21,625, which is, first of all, the again, presents like a bit of an island up there. I'm going to take an oval and duplicate it. I can't help but just document that island because it stands out so aggressively. One reason it stands out is the distance and the gap move it made, but also it's 3 days above a breakout, Brent, that did not get held. And so even the conservative trader who said, I'm waiting for some continuation after holding this level, they didn't get day 4. And if you were conservative, you could be forgiven for believing in that new level there above the red line. Absolutely.
I mean, it just goes to show that there's nothing you can do. You never know. And no matter what the technicals say, it can turn against you because the technicals aren't just driven by prior technical, line charts and support and resistance. News can certainly affect the market. So we have to have some humility here in terms of our investing prognostication because you just never know. This is a perfect example. Almost no matter what confirmation signal you were looking at that point, probably would have said, hey, that's a realistic breakout. Well, it didn't turn out that way right now.
Yeah, if you're looking for a very short-term view on today's candle, which again is maybe going to be irrelevant because it's such a news-driven day today with the FOMC, you might move into the 5-minute bars, and you might take a look at where we reside relative to the pivot points. You can see we opened above the pivot, and if we were going to take any very generic standard intraday viewpoint, it may be that the pivot needs to be held today. So if the pivot is maintained, then at the purple line that my cursor is on here, then some traders in the short run would take that to be optimistic and opportunistic, perhaps heading into the second half of the day and perhaps the rest of this week. So that might give you something to keep an eye on in the short run as it relates to the NASDAQ 100. We are going to look at semis here momentarily, but let's move into the Russells first. The Russell 2000, that is, the small caps. Trying to hang on, Brent, but boy, did we banged our head right on the ceiling up there in the 50-day moving average the last week here, haven't we?
Yes, we did. The one good thing on the, it's interesting because this Russell looks so different, chart looks so different than the past two. I mean, the NASDAQ and the S&P 500 look pretty similar for the most part. We pointed out some of the differences there, but this looks just totally different. This one, the last 3 days, basically, we've closed, well, including today's candle, I guess, we're kind of in that same little area there. Yeah, we have that clear resistance, but that's kind of, you can kind of consider that as like a support level, right where we're at here. So we have a really tight range on this. It could, on the downside, are we going to hold? You can see that line that Kevin drew in there, that white line there, and of course we have a 20-day moving average below it if it breaks that. And right above that, we have our, a 50-day moving average. Mm-hmm. And so we got a tight space here, and it could be, you could look for a breakout either way, possibly by the end of the day, for all I know,
Yeah, certainly. That's a possibility for sure, right? Depending on maybe not decision, but certainly on commentary.
Yes.
And discussion after the fact.
Yes, and that Russell is more likely, I say more likely, you never know, to be more affected by interest rate type discussions that are likely to come out of the Fed and monetary policy.
Yeah, far more sensitive to the discussion on rates. Two more things, everybody. Bullish divergence in this instance with the test at the 200-day, right, Brent? We don't mind that.
Yeah, no, we don't mind that. And just, everything you said before about divergences don't mean necessarily, what the future is going to hold. But, you could take it as one data point amongst many.
That's right. And last thing is just the sandwich between the 50 and the 200, or 20, the 20-day and the 50-day might provide you the insight you're looking for, everybody. Trades through the 50-day to the upside would be significant. We haven't been above the 50-day since 12/17, so that takes us past 5 weeks, right? That's about the long end of a move, of a swing move, that is. And if we can recapture the 50-day, you're going to see traders maybe coming back into play here on the long side. The other alternative, of course, is below the 20, maybe below my white line here, the lows of this gap level at around 2250. That could throw you back to the 200-day moving average. But you might be more encouraged by virtue of the fact that we hit that 200-day and bounced so cleanly. We got a nice gap move in there. And again, consider your gaps as important levels of potential support and resistance. That ledge at 2250 could be very important in the near run. But if nothing else, a better setup maybe than we've seen of late, and an improving chart. So we may like what we've seen here from the Russell. Now, the one we're not going to like, but I want to talk about a lot is the semis, because one, I mean, it's been such a difficult thing. We have been talking about this for so long, Brent, and and I know I've got drawings galore on this, but are you at all surprised? But I mean, granted, we don't get 9% industry group sell-offs too frequently, right? That's what we got on Monday in the semis, a 9% sell-off. But are you at all surprised about the level to which it sold and then stopped? No,
not at all. If you're going to accept that support levels are a thing, and there's traders out there that just they discount technical analysis and don't think it holds any weight. But for most of us that do look for technical levels and support levels, when you have a big sell-off, you kind of expect it to go to some level. Now, it may be a more closer term level or a farther away level, depending on how big the sell-off. It was a big sell-off, but it went right to some prior prior lows there. So yeah, no, I don't think that's a surprise. And we had that nice bounce there. And that's what you want to see in the market. We've had a bounce. Now the magnitude of the sell-off, well, it was kind of strange news, unusual news. And this is a space that is typically more volatile. Amongst different spaces, this is one of those more volatile type spaces. So a big move in that space isn't surprising. And it's also a space that we often use to look for leadership in the market. And so it's not surprising that it's such a big thing to have that sell-off and that it affected the whole, the market, especially that NASDAQ, quite a bit.
Yeah, it sure did. Obviously, 3% move to the downside on the NASDAQ 100, 9 on the semis. And the thing that also stands out to me is just, the reminder of what these tails imply for the trader. It tells us that there were bounces there, right? So if you're looking at this on the intraday base or the daily basis and you see these lengthy tails, you can clearly see that there were buyers coming in at these levels, right?
Yes.
That's what creates the tail. So the fact that we had, even yesterday, we finished above the open, but traded below the low on Monday and rallied back to finish above the open. Do you take that as more optimistic about the potential of this level holding?
That's a good question, because it wasn't a resoundingly bullish candle by any means, I don't think, because given the magnitude of the move that we had down. However, it was, in terms of how you phrase that question, Kevin, of holding that level, yes, because we tested the waters. We took our toes and we dipped it right in those waters there, just like we did the day before, just like we had in the past. And we said, yeah, that's a little cold for me, I guess. I don't want to get in there. And so we had that bounce. So a resounding bounce. No. Did we come anywhere remotely close to, we haven't even started to fill a gap there on that. But it is at least a bounce at that level. So not a super bullish bounce, but also one that does kind of confirm that support level.
Yeah, I think so as well. It still has the resemblance of a hammer. Yeah, we would have liked to seen the hammer filled in all the way to the top. But let's be honest, Brent, we got a follow-through day. We're already trading above the high of yesterday. And if that maintains, that would be a whole day, a close potentially above the high of the low day. That could be, for some traders, the aggressive re-entry on a SOX position.
Exactly. And a couple of things. One concern in the market right now and in this space is valuations. Well, this was a kind of a quick, easy way, I guess, to lower some of those valuations a little bit. And so maybe that is a re-entry point for some people there. And let's see what else. I was going to say something. I can't remember what else I was going to say there on that. But that's that was a big move and possibly a bigger opportunity. And we'll just have to look and see what happens from here. We do have admittedly we've been talking about that support level. We have some hefty resistance above it too now, because we have 3 moving averages above that. We have the high of the low where the gap occurred, where you just drew that line. So between all that, it's likely not going to be a quick march back up. But I guess here's what I was going to say. Now I remember. It was because it was an unusual situation. The question then becomes, and this isn't really a technical question as much, but this is just a question about what's happening. How much is like new AI technology coming out of China really a game changer? How detrimental is it to the fortunes of your NVIDIAs and other stock Broadcoms of the world and whatnot? How detrimental is that? Is it really a huge game changer, or is it a speed bump? The jury's out on that, I think. I don't know the answer to that. But right now, it seems like the market is saying, and maybe a little bit more of a speed bump at this point, but we'll have to see.
Yeah, I agree. The hope, of course, is that it's a speed bump.
Yes.
But chances are there's certainly opportunity to hear something out of Fed Chair Powell that might shift that viewpoint a little bit. Meaning, simply with this new piece of information around AI and the potential for AI investment to be depressed in terms of the spend, because it can maybe potentially be accomplished for lesser spending dollars by these companies that might put squeeze on margins here for some of these AI companies. That stated, you remember you can take a little bit of a different narrative or slant on some of what Jerome Powell has to say today based on what's just occurred in the last 3 to 5 days. Whereas 5 days ago, that would not have taken the bearish slant. So remember, everything has a place amongst thought processes for traders. From the technical aspect, the things that stand out to me are that low of the gap, the white line I just drew in, and then, of course, all that confluence of trend data, the 20-day, the 50-day, the 200-day, all right there together. So there is likelihood is we need to at least get into the gap to give bulls any real confidence here. Otherwise, this bounce could just be considered a relief bounce if we fail at my white line that I've drawn in. That's entirely possible, everybody. We at least have to acknowledge that's a possibility. If you are a buyer at the lows down here, that is potentially excellent risk versus reward, even if you're forced to exit in the ballpark of 5,050. But, I have to bring that out because this is such a very, very clear, significant gap zone, Brent.
Yeah,
so we have to monitor that. Exactly, right? So we got to get into that gap first before we have any hope of filling said gap. So plenty to keep an eye on there. Now, Brent, I think what we should do is talk a little bit about we have a lot of stocks in the news today. Did you want to go in and start talking maybe about some of the ones that we have headlines for today, or should we start with maybe the big boys that we have 3 ones in particular that we talked about pre-show that are set up for earnings today?
Sure. So earnings, this is the peak of earnings week, and this is the peak week of earnings, I think, and this is the peak of the earnings week too today. And so 3 of the largest companies in the world are releasing earnings after the market day, plus a whole bunch of other bigger companies out there. If you want to see earnings on Thinkorswim, you go to MarketWatch at the top of the page like Kevin did. You click on calendar, which is one of that sub menus, and then you make sure earnings is checked, and then it's going to bring up your stocks. And if you ever want to, I always mention this, if you don't want to look at every company's earnings there, or if you want to just find your company, you can type your ticker in the symbol box, or you can go to that little gear that Kevin's clicking on, and you can choose a sublist. So if you want to do S&P 500 or something, you can go to public S&P 500 and just narrow that list down a long ways. And then you're going to see just those S&P 500 stocks. Makes it a little easier to view. Today is the 29th. You can see the date there on the left column. And you can see some companies such as Meta, M-E-T-A is somewhere in there. There it is.
That's a big one.
And Microsoft and Tesla down there at the bottom, as well as some other companies like IBM and Lam Research and whatnot. But those are it's interesting because what's going to move the market? It's hard to say. You typically, and of course these are after the market closes. So if this is going to move the market, it's likely to be more tomorrow,
right?
As to the reactions to it. Today, the biggest market mover is probably going to be that Fed, the Fed stuff. But tomorrow, we already know what is most likely to move the market quite a bit, and that is corporate earnings.
Yeah, good chance, by the way, especially with some of these names that we just looked at, the big 3 you noted. But, I mean, ServiceNow is not a small company.
Right.
Las Vegas Sands, Lam Research, IBM, heard of them. We're going to absolutely have a lot to work with here tomorrow. That's going to dictate perhaps the way tomorrow goes. It also, like I said, maybe Jerome Powell's commentary dictates the way tomorrow goes. One of the other things I just wanted to point out, by the way, with these morning reports, like Danaher today reported already, if you click here to go to the press release, it'll bring you this page. Gives you the full detail, everybody.
Yeah.
So once the report is out, you can read the detailed report right off the news wires. A really good way for you to dive into these individual company details that you're looking for. And Brent mentioned it, we selected the S&P 500, but maybe you only care about the positions you maintain. Change it to your current account positions and monitor earnings that way. Don't forget, you can change it to current accounts and then separate the page. Detach the page and throw it elsewhere so that you've always got it loaded and launched and ready to go for you. You can always keep a close eye on it. That's another way you can go about it. So, Brent, I thought we should look at these on charts and talk about the potential moves for these big boys. Let's just use those three: Microsoft and Tesla and the other one. Meta, yeah. So let's start with Microsoft. And let's just see where we reside. We've kind of been in a bit of a choppy action sideways and consolidation, more or less as high as 450 and as low as about 405 to 400. If we looked over at the trade tab and specifically the options page, we could get using this week's expiration, we could get a picture of expectation. But Brent, we could also just look here at the detail right here that kind of details, the expected market maker move on an overnight basis for these earnings, right?
Yeah. So plus or minus 19 and a half, basically $20. So, if you wanted to on that chart, you could say, well, look, the stock's at, I'm just going to round and say a 20 plus or minus $20 move.
Yep.
You could look at that chart and add 20 to the current price. So 461 would be one level.
Right about
and then, you don't have to be precise on this because, look, we don't know exactly where it's going to go. This is just a probability based on that. And then down to 421 there on the downside. So that's kind of what the market maker move, or the implied volatility, I guess, is telling us. And so that'd be basically a standard deviation that it stays within there after earnings. Now, that's not directional. It's not bullish. It's not bearish because we don't know which way it's going to go. But that's kind of the envelope you'd expect it to stay in.
Yeah, what I find notable about it is we're right in the middle of that in terms of the price. It doesn't really afford the bullish long stock owner the opportunity to take a position with expectation of it going, up to that spot or down to that spot. You're right in the middle of that range. So that's kind of a 1-to-1 risk to reward ratio here. But that does give you an approximation of what traders might be anticipating from this move. It doesn't mean it has to happen. Again, IV is merely a calculation of the volatility that we're seeing heading into the announcement, but it doesn't have to go that way.
It doesn't have to go that way. And, for those who, I don't think we're going to get too much into options here or anything, Kevin, but for those of you who are interested, last Friday, I did a class in our advanced options specifically on earnings, placing option trades on earnings. And it's talked about long straddles and short straddles. So if you want some more info on that, you can always check that out. That's a full, 40-minute discussion or something on that. So, which we obviously don't have time to get into today, but there are particular plays you can do for earnings. But for our purposes, you can mark that on the chart using the implied volatility move that we just looked at, and then you can also compare that to support levels and resistance levels and see kind of where they match up, and you can help to decide if you wanted to make a trade or something on that.
Yep, a good point there as well. I saw a couple of questions about our functionality with the MarketWatch earnings detail. No, we can't create an automatic watch list from those companies that are slated to report. But obviously, if you came in here and you defined it as S&P 500 or the company, the specific group you wanted to see, quickly you could build a watch list pretty easily.
Yes,
by just going to create right here.
Correct. And let me give you another thing you can do.
Yeah.
You can create a scan. And if you want to scan for companies that have, say, earnings on the S&P 500, here's what you're going to do. First of all, at the top of the page, if you just want to clear out what you got in there right now, Kevin, you can go and, like, say, scan in and just do S&P 500 there, okay? And then what you can do is you can add a filter, add a study filter. And in the study filters, there's corporate actions. Fourth one on the list. And you can go to earnings, and you can say it has earnings announcements anytime in the next, and then you can choose. It says the default is 10 bars there right now, but you can change that to next 20 bars or whatever. 20 bars would be roughly a month of trading action.
Let's just make it 5 so we can limit this number.
Okay. And then it's going to hopefully come up with something. It's thinking. Sometimes, okay, here's another, while we're this is spinning around. Let me just tell you this. When you're using the scan, the stock hacker on Thinkorswim, sometimes it does this. I've noticed this on mine as well. And it gets in this little loop. If one little trick is you can just go and change that 5 to 6, for example, and just make it and scan again and see if it does the trick. And yeah, there we go. So just do a little tweak on it. So that's not a substantial tweak. In fact, even if you go back to 5, it may work now. But the point is, there's that, and there's 3. And so there's a lot of stocks because it's S&P 500. A lot of earnings. And that just shows you the magnitude of the earnings week that we're having right now. So you guys, my goal is not to say this is exactly how you do the scan, but I want to empower you so that you know how to do this in the future. Then if you save that as scan, well, you can save that as a watch list, but you can also save it as a scan, and then it's going to update, Kevin. So then if you look at it next week, it will look at the next 3 days out next week and see what the upcoming earnings are. Just to be clear, if you save something as a watch list, you're saving the stocks themselves. If you save the scan, though, that watch list is going to be a dynamic watch list that is going to always look at that 3-day window out into the future for those stocks that are going to release earnings. Okay?
Yep. In fact, I'm going to say I already clicked save, so I'm just saying upcoming earnings here. I'll hit save on that. And now when I go to my watch list, if I want, so I'll just change this, go to my personal. Let's see, upcoming earnings. See that little pink circular, that target, everybody? Yep. That lets us know that is dynamic. So every time I come in here, when a company has already reported, it's no longer going to be on the list. So tomorrow we would not expect to see Microsoft, Meta, Tesla, etc. Those should be off this list. But the ones that are reporting tomorrow and forward for the next 3 market days, those would be the ones on that list. So yeah, you're right, Brent. This was an excellent fix to something we can't do cleanly, but we can just create a quick scan for it utilizing that study. That was pretty simple to do.
Yeah, it's easy. And that stock hacker is a pretty slick tool that you can do a lot with. Just what you need to do is not be intimidated by it. You just got to play around with it and see what's on there.
Yeah, I agree. That's a hard thing to do, but it stems from playing with it more than anything else. I think those of us that have spent the time playing around with all the criteria or taking scans from other classes and putting them into your platform and then maybe playing with that criteria a little bit to see if it impacts the list you're getting on the scan. Those are the kind of things that I've been comfortable making adjustments to initially. And then that comfort led to me just starting from scratch and working with things a little more cleanly. I can't encourage you to do that anymore, honestly. That's just what it comes down to, I think, for the most of us. Utilizing the tool, playing with it, and getting a little bit familiar with the inputs is really what's required of us. Brent, what do you say we move on to Tesla? Let's take a look at how Tesla's appearing here. The chart on this seems to be a little bit more standard. I mean, this is a pretty casual view of Tesla at the moment. That orange line actually coincides with the prior all-time high. Yeah. So I wanted to point that out. But outside of that, Brent, boy, right to the 50-day moving average, huh?
Right to the 50-day moving average. We're right there. And of course, that is Probably, when we have earnings, we're more likely to see a bigger move. And, you can use what we showed you earlier with Microsoft to kind of estimate what that move may be. But, you never know. Maybe it can move nothing for all we know, I guess. But that's kind of gives you just an idea of the magnitude of that move. But we'll probably bounce up or below that moving average there.
Yeah, it's going to be one of these. It's going to dictate the next move, right?
Yes.
If we maintain the 50-day and you get a bullish move from here, a lot of traders are going to say that this looks just like a standard pullback in the midst of a long range uptrend, and you'd be hard pressed to argue with it. Really, I mean, it just looks like a beautiful pennant forming in here with the 50-day moving average acting as support. Some traders would take that 3-day action here, a lot of back and forth over the last 3 days, Brent, but that action's tightening up even further, kind of validating that 50-day moving average and its importance. So, that all stands out. And like you said, about a 37, 38 point move either direction from here, a little shy of 10% potential on the table with the Tesla move today.
Yes, and when you look at a pennant like that, you sometimes we say, well, you can wait for the breakout. If it breaks to the high side, it's more bullish. Breaks to the low side, it's more of a bearish forecast, so to speak, going future. Of course, it's no guarantee, but you probably won't have to be as patient with earnings coming out to wait for that break, I guess is my point.
You could also suggest, Brent, that there's a possibility. What if earnings weren't at everything they wanted, but they opened weekly at down 20, but that's where buyers said, no, enough of that selling stuff. What if that was the bounce spot, similar to what we saw with the semis? The sell-off took us down aggressively, but we found a level of horizontal support instead of a moving average support.
Absolutely, that could be if we go down there and we stop, then that's like confirming its level as a support level. It's as a support level.
Absolutely. Okay, so I saw a request to share that scan. Sure, really easy one to build, but I'm happy to share it with you, everybody. Just remember that the scans are not guaranteed for accuracy nor timing. So I will share this with you. I'll place that in the chat that you guys can have, and feel free to load that up and work from it, or maybe make some adjustments to it as you see fit. There you go, everybody. Let's peek in finally on the last one. We said Meta. Meta's been in the midst of a continuation move, broke out this week. Beautiful bull engulfing candle on Monday. So it swallowed all that AI concern. One of the groups that may not be as concerned about this DeepSeek scenario here, Meta.
Yeah, and they are, that's just a bullish chart, to be honest. The only, now, of course, it can all change with earnings, because sometimes bullish stocks all of a sudden turn bearish, or vice versa once earnings comes out. But keeping aside from earnings, we do have a nice strong move. The only thing is, I think some traders may look at it and they go, well, it's kind of extended, or you can see that in that RSI, it got up real high. We've extended from our moving averages. And so often, I think what happens is you see a little bit of a consolidation period, a flag, if you will, if you wait on that. This, the earnings complicates that just a little bit there.
It does, as does the fact that the distance or the height of the range we just broke was 50 points, 585 to 635. So if we added 50, that would give us 685, and the high is 682.50. We almost achieved the measured move target in a 3-day window on a breakout. Not a lot of traders are going to, some traders will look at this and say, well, it not likely to continue to explode to the upside. So maybe traders would look at this and say, well, instead of maybe being on the long end, there's a lot of volatility here. Maybe the opportunity is for an option seller as a thought. With higher IV like this, after having potentially already made a measured move target. That could be a way that some traders would look at that.
Yeah, 110 IV is a pretty big number there on that. And so, that's why you're getting such a big move. The funny thing is on this chart is I usually caution people when we're looking at a channel and looking at a target, I usually caution people and say, don't expect it to occur really quickly. Well, it took all 3 days to fill on that one. So
I know. It stinks when our efforts to keep us, in line with expectations are just completely thrown out the window by a stock that makes the measured move in 2 days. It's just not fair. But it's a good reminder. Guess what? It can happen. It's maybe just not a larger probability of occurrence, but it did, at least in this case, make the majority of that measured move here in very fast fashion. So, Brent, we are unfortunately at time. We're going to wrap it up right there. But as always, love having you on a Wednesday. I feel like we covered quite a bit of topics today. Really enjoy you sharing those thoughts and ideas with our traders, though. Thanks.
Great to be on with you.
Thank you. And thanks to all of you. Of course, lots of great discussion and questions in the chat. Big thanks to Cameron May, who handled things beautifully there. Do utilize, if you'd like, that scanner left for you in the chat as well. I'll try to post that in our notes. So if you're coming across this in the archives, everybody, check the notes down below for the link to the scan detail that we shared here today. But outside of that, have a fantastic Wednesday. Remember, FOMC decision at 2 p.m. Eastern, followed by testimony thereafter at 2:30 p.m. Eastern. So plenty to keep your eyes to on the day today. More to come here from us on the Schwab YouTube coaching channels. But thanks for being here, everybody. Have a fantastic Wednesday. We will see you again real soon.